Right. Good morning, everyone. Let's start it out. Okay. Last night, obviously, a very poor session on U.S. markets. More or less opened at the highs and closed on the lows. Never a great result. A lot of things moving around aggressively. Again, we obviously had the VIX up last night, heavily up 10.5%. We had crude oil, which the previous day's 8% rally was pretty much wiped out with an 8% pullback yesterday. We had that 3-day 30% rally in oil, which was one of the biggest on record of all time, which the final day was obviously very quickly wiped out yesterday. We had August vehicle sales, which were actually really solid. US PMI data came out a little bit softer than expected. A bit of mixed data out of Europe, maybe a touch softer out of Europe, but some of the stuff I think relatively all right, especially provided where we are right now as a market. Moving on into Asia, you can see it's kind of a non-event outside of Shanghai, which is really kind of the story, I think, almost every day. Shanghai obviously leading the charge to the downside going into a long weekend there with the World War II parade. If I'm not mistaken, markets are closed the next 2 days in China, so don't expect to see anything that going on in that part of the world for the next couple sessions. But I think that this bomb out that we've seen in Shanghai really just you haven't even managed to have a day cap bounce the second time after we've taken out the lows for a second time. Have just managed to kind of continue to move lower, and I think that's really a negative. We've also had the Australian market, which you can see is really starting to put on a consistent slide as well, and I think it's an attachment to China, and everything that's attached to China right now is just absolutely decimating. We had Canada yesterday that entered into a technical recession. That's on the back of lower crude prices over the past few quarters. I think that we're getting ready to see the exact same thing in Australia. I think we're getting ready to see the exact same thing in Brazil. I think we're getting ready to see the exact same thing here locally. So just keep that in mind. We've got the entire emerging market space is coming off of this high note. That's really, we think about it, the U.S. economy being the largest economy and all those types of things, but really what's been driving this expansion in emerging markets as much as anything has been China, and that's what I think that the market is telling us right now with the way that this whole thing is playing out. So just keep that in mind that we have much more a tight relationship to China and the rest of the emerging market space as well than everyone thinks. So I think that watching China and seeing what happens there and following the news story is actually more important than a lot of people are giving it credit for. All right, ISM non-manufacturing numbers year on year. So down 12% in China. Not exactly a great number. I think that you can't just factor this into just China because it's obviously a global slowdown. But the bottom line is that China, I think, is driving the global slowdown. All right, no corporate action to speak of today in terms of market data. We have Japanese monetary base, which is slightly higher than expected. PMI, construction PMI out of the UK at 1030. We've got mortgage apps in the States at 1. At 2:15, we've got ADP employment change. That's one we can pay attention to, as well as factory orders, and then crude oil inventories at 4:30. All right, let's get into the maps. I'm not going to go too extensive simply because the market's kind of bombing out. Everything's coming down. Let's just look for some stuff that has some important levels, one being Breit. So yesterday, we talked about this 2 sessions ago, or 3 sessions ago, and I named these couple levels that were key. The one level I think was here about 137, 138, somewhere in there. I call it 137. And the other level was right up here on what was the shoulder line of the Head and Shoulders. We basically came up perfectly, tested that shoulder line of the Head and Shoulder at 146 and reversed hard. We've now dropped below the neckline here that's at 137 or 138, and I think that, you know, unless we can get it back above that and reclaim that very quickly and hold it this morning, then we could potentially see further downside here. I wouldn't be surprised if we even come back down and retest the lows, especially with the way the rest of the retail sector has been beaten to absolute pieces. I mean, Mr. Price yesterday was just totally decimated. You can see they were down 13+%. I saw a headline somewhere saying that it was the biggest down day in like 14 years or something like that out of Mr. Price. So that's saying something. The 220 level is really the major technical level of support here. You can see that we've dropped it. Dropping that, I mean, it looks a little bit Head and Shoulder-ish as well. It's not classic, but you can see there, left shoulder, right shoulder, and obviously the head up here. So either way, the waves are there, and I think that that's what's important. Now we've dropped this 220 level. You know, when stocks fall like that, when they fall, you know, 12.5%, 13% in a day on the back of earnings, they typically don't just turn around and start to march back to the upside. And I think that that's important to take note of here. I mean, there's quite a good chance that we have a second day play down to 200 or sub 200 today. And, you know, I think that this thing's down below 220 for the foreseeable future. If it was to get back above 220 over the next couple sessions, I would be seriously surprised. So you got to keep that in mind, that you know, that these sort of moves are they're not normally short-term moves. You don't normally see snapbacks after that sort of scale of a move. Next one I'll show here is Tiger Brands. Yesterday this thing held up so incredibly well relative to the rest of the market, and you can see here just kind of hanging around up sub 300. If this thing takes out 300, because it's built and created such a defined line here at 300 and massive level, that this is just going to give us such an opportunity to play around it when it does move. So if we get through 300 here, this is one of the ones you can just keep your eye on. If it gets through 300 here, we got a 30 Rand move coming potentially, which is the height of this channel. You can see here, this is 270 level. You know, it would be popping through 300, and that would take us up to the 230 level, which is right up here around the 200-day moving average. I really like that the potential setup there if we do pop through. So just keep it on the radar. The last one I'm going to show is Sasol. You know, all the mining stocks outside of Kumba yesterday traded really poorly. I was actually very disappointed. I mean, the Chinese PMI obviously was the one that kind of led it, but you know, we had been trading so much better there. A couple M&A deals. You know, the night before we were up 8% in crude oil, so I kind of thought that maybe this thing could continue on a little bit, and it just didn't. Watch this thing over the next session or two. We failed pretty hard yesterday, right at the 200-day moving average, and kind of a major-ish level up here around 435, 437, which has topped out the last few bounces up. And yeah, I wouldn't be surprised to see us come back down and test 400 now that we kind of rolled over there at the 200-day. And that's it for today, guys.